What's up, people? Welcome or welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, NEO, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So following its record-breaking delivery quarter, Tesla is currently hosting the Brandenburg County Fair at its Giga Berlin factory, set to open likely next month. Earlier on Thursday, Tesla held its Investor Day meeting at the new Giga Texas factory, which is also on the verge of opening. Among the major news shared during the Investor Day event is that Tesla will be formally moving its headquarters from California to Austin, Texas. If you've been following Tesla for as long as I have, you know that this was not a matter of if, but rather when. Interestingly enough, GM also had its own Investor Day earlier this week, and both Ford and GM made headlines with what has been acclaimed as bold announcements for their going all-in strategies. Instead of simply going over the details from Tesla's Investor Day, I thought that this interview with Gene Munster from Loop Venture provided a bit more perspective to what's really going on in the EV landscape. I will link the full coverage of Investor Day should you want to go and watch that on your own free time. But for today, I'll play you some clips from the interview with Gene, add some commentaries along the way, and wrap up with a weekly performance review for my portfolio expressed in percentage gain or loss. With that, let's get into it.
What's your number one question going into this meeting? And do you think that you'll get an answer?
I think it will be answered. My number one question is, when is Cybertruck coming out? As a quick refresher, pickup trucks account for 20% of U.S. sales. I don't know what it is globally. This is a big market. It has been delayed. That's my number one question. And if I can take a little bit more here, and my number two question is around Model 2. This is their $25,000 car that they've teased at coming out. It is tough to build a car, to purchase a new car for $25,000, and they're going to try to do that. And I think when you put those two together, get a better sense of what's going on with Cybertruck and Model 2 in combination with their current lineup, which obviously is growing 100% faster than the rest of auto, you can start to build a case where this company can deliver on its goal. They started out the analyst day here, or the shareholder meeting, by kind of reiterating their goal of 20 million vehicles. And so you can see how you can get there.
So first off, that 20 million cars produced in 2030 is a key point to keep in mind when it comes to Tesla's goal versus the competition. Elon ended up clarifying that Cybertruck would start production in 2022, but as he explained, volume production would not be achieved until 2023. The Model 2 name was also officially killed. It's now pretty clear that Tesla's $25,000 car will have a different name. The focus at the moment is clearly on ramping up Model 3 and Y out of the Giga Berlin, Texas, and Shanghai factories.
How do you view Tesla's goals, Gene, and those two data points when it comes to the Cybertruck as well as the lower cost car, in light of GM's bold target raises from yesterday and also Ford's big plan, particularly for the F-150? It seems that its competitors are really going gung-ho on EVs, and this has got to, I would imagine, even at the margins, impact how you view Tesla and its market share, by 2030, let's say.
Getting to the core question around sustainability of this massive growth and this potential that they can grow at 50% compound for the next 10 years, which they talk about. But I just want to quickly put GM's comments into perspective. They've had a 2-day, as you mentioned, analyst day. They talked about doing about $90 billion in EV revenue at the end of the decade. So 9 years from now, $90 billion. Tesla, by my math, should be around $700 billion in EV revenue at that point. In other words, is that if you take GM's guidance and say that they're going to achieve that guidance, their electric business will be 15% of the size of what Tesla says their electric business can be. They're all estimates, so the proof is in the pudding. But I would just say that as a company that has been around for a long time, General Motors, understand their excitement around being a platform company, EV, robo-taxis, that is all good to hear. But the substance of the targets fall well short. And the bottom line is that they're going to be losing market share in the new EV world.
Did you catch that slight eye roll and smirk? Wait, let me replay that for you. I think Gene did a fantastic job at providing perspective here. The fact of the matter is Tesla has been growing at 50+% year over year since inception and is expected to continue at that pace through the end of the decade. In contrast, legacy auto sales have been declining. I think Elon said it best. Electric cars today are a negligible part of auto sales, like 1% of global sales, if you really think about it. There's a tremendous amount of upside from here, and as long as Tesla is actually able to get its hand on the needed components, demand isn't the limiting factor.
I would submit it looks like he's really grown into the job of CEO. Is that an observation you share? And quite frankly, if it is, I think this stock is poised to take out the all-time highs we made at that $900 level or so.
It's hard to predict a breakout when you've had the kind of performance that Tesla stock has had. But when you put the pieces together around their current business, how they're gaining share, around what the future products are, you can build a case that this can be a much bigger company.
Again, anyone paying attention now realizes that Tesla will be a much bigger company. Elon reiterated while answering investor-submitted questions that introduction of the Semi and Roadster would happen in 2022. But volume production for the new models and factories would be in 2023, at which point the Model Y is expected to be the best-selling vehicle globally. For reference, Model 3 is well on track to take that crown for 2021 if it hasn't already.
Tim, it would seem that getting a Cybertruck that is really competitive would be key to keeping its market share in that particular segment, and then getting that Model 2 car out is going to be key to it maintaining its more than 60% market share as well.
You would think so, but again, the 241,000, the deliveries have been so extraordinary, and the ramping, you have to give credit. And so to the extent that I, again, the EV opportunity, everybody understands that, and it really is right now, I think, a scaling issue, which Tesla has to still get further down the road, even though major victories. By the way, you have to point out also that the stock has been a bedrock of stability during a volatile market. I mean, it's almost extraordinary when you look at just how unvolatile or really kind of benign the price movements have been in Tesla or in the month of September, when the rest of the market has been having a very difficult time.
There goes that Model 2 name again. But the stock has not only been stable, it's actually been on the rise. Coming out of Investor Day, it received an upgrade from Canaccord Genuity analyst John Dorsheimer, lifting the price to $940 from $768 and maintaining the buy rating. And the reason the stock has been on the rise is because investors are now realizing that, as I've said before multiple times, Tesla has already won the decade. The rate at which legacy auto is hoping to make the transition simply isn't fast enough, and it's becoming abundantly clear. And so it's no surprise that you see things like VW, who has been the most aggressive in trying to make that switch, starting to panic. Now, you got to remember that legacy auto is simply trying to retain its customers as they electrify their fleet. Tesla, on the other end, is ramping up to meet its ridiculously large demand.
Dan, just quickly, in terms of the relative outperformance, and you've pointed this out when it comes to Tesla in the ARC Innovation Fund relative to the rest of the components there, which are supposedly growthier, cutting-edge kinds of companies, and Tesla's really held up. Do you buy the thesis that guys putting forth that part of this might be that Elon Musk has got a muzzle on, so to speak? I mean, he's actually acting like a grown-up CEO. I mean, aside from the Shiba Inu tweets, et cetera, he's relatively staid these days.
Well, it's not only that he's stayed, he's actually growing into that genius that everyone says that he is. I saw him at Code last week with Kara Swisher. I mean, he's very deliberate about a lot of things that he says. And I think Gene also mentioned the fact that he's focused on Mars. And when you talk to him, and it's not just a Tesla conversation, you see, I mean, they're sending satellites and they're returning the rocket ships and they're sending I mean, they're doing big things. So I think he kind of gets really where he needs to be for a guy who's going to have $1 trillion market cap company in Tesla in the not so distant future, probably. And then you tell me, what's the TAM on a SpaceX? I mean, is it trillions? You know what I mean? So I don't know. Maybe he won. Elon, for like ruler of the galaxy. I mean, at this point, Ming the Merciless. I mean, it's him. He won. We're done.
And that is a mic drop moment right there. Dan used to be one of the biggest Tesla bears out there. Slowly but surely, the finance media is coming around to the realization that Tesla is more than just a car company. During my AI Day coverage, I've discussed where I think all this is going. And as Tesla delivers over 1 million cars next year, while most of legacy auto has either nothing to offer or is simply struggling to ramp up, the manufacturing expertise advantage that Tesla has will become even more clear. Elon said it best, making a prototype is easy, achieving volume production is hard. But on that note, let's switch over to the weekly performance review expressed in percentage gain or loss for the portfolio. Now, a few things have rocked market this week, and I'm not going to go through the full list of things. A couple of ones to call out is the disappointing job report, but more importantly, the rise of the 10-year Treasury bond yield rate, which has hurt most growth stocks. No one was spared, but thankfully, Bitcoin and crypto is increasingly decoupling from the equity market, and as a result, the portfolio did manage a 5.64% gain for the week. Not bad at all. As we head into next week, major banks will start reporting their earnings, and that should help shed some light on how the economy is actually doing. I would say that you want to embrace the volatility and use it to your advantage. I guess that's what I've been saying for quite some time now, so no surprise there. And on that note, I'll leave it here for today. If you enjoy the content, drop the video a like if you haven't already. For my newcomers, remember to hit the subscribe button and ring the notification bell so that you don't miss out on any future content just like this. As a reminder, I post every Sunday and now on most Thursdays for crypto-focused content. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.